The crypto market is at a pivotal moment, and nerves are running high. Today, we're zeroing in on three major altcoins: Polygon, Solana, and Cardano, each testing critical support zones. These aren't just any coins, their next moves could set the tone for the entire market. If these support levels hold, it could mean a reversal and a buying opportunity. But if they break, expect panic selling and sharp drops. That's why we're watching these coins so closely. What happens next is crucial for investors. Stick around as we break down each one, chart by chart. First up is Polygon, Matic, Ethereum's go-to scaling solution. Over the past few years, Polygon has become a critical part of the Ethereum ecosystem, helping to reduce congestion and lower transaction fees for users and developers alike. Its rapid rise has made it a favorite among both retail and institutional investors, and its technology is often cited as a blueprint for future blockchain scalability. Right now, Matic is clinging to a major support zone around $0.50, a level that's acted as a launchpad for rallies in the past. This price point has proven to be a psychological barrier for both buyers and sellers, and it's where the market has repeatedly drawn a line in the sand. But the more this support is tested, the weaker it gets. Each time the price bounces off this level, it chips away at the confidence of traders, making it more likely that the next test could break through. Right now, bearish sentiment is putting serious pressure on this floor. Negative headlines, macroeconomic uncertainty, and a general risk-off mood in the crypto market are all weighing on Matic's price. If Matic bounces here, it could signal a strong reversal and a new uptrend. Such a move would likely attract sideline buyers, eager to catch the next wave higher, and could restore confidence in the short-term outlook. But a decisive break below $0.50 could trigger a steep drop, with the next support all the way down at $0.30 or $0.35. This is a wide gap, and falling through it could mean a rapid, almost free-fall move as stop losses are triggered and panic selling sets in. That's a potential 40% plunge, enough to shake out weak hands and cause panic. In crypto, these kinds of moves can happen fast, leaving little time for traders to react. Despite the price action, the fundamentals remain strong. Polygon is still building, with the transition to Peel and Polygon 2.0 underway. The team is focused on scaling solutions, interoperability, and bringing new features to the network, which could pay off in the long run. But in the short term, price action is king. No matter how promising the technology, the market's mood can override fundamentals, especially in volatile times like these. Fear and market mechanics are driving the show. Emotions can run high when key levels are tested, and it's easy to get swept up in the volatility. For traders, this is a moment to have a clear plan. What will you do if it bounces? What if it breaks? Having a strategy in place before the move happens is crucial to avoid making decisions based on panic or FOMO. Watch for a strong close above or below $0.50, not just a quick dip. False breakouts and whipsaws are common, so confirmation is key. Volume is key. A real bounce needs conviction from buyers, not just a temporary blip. Look for a surge in trading activity to confirm that the move is genuine, and not just a short-lived reaction. On the flip side, a breakdown on high volume means capitulation and could accelerate the fall. When sellers overwhelm buyers, the price can cascade lower, triggering more stop losses and margin calls. Recent price action shows a clear downtrend, with lower highs and lows. Sellers are in control, and the path of least resistance is currently downward. The RSI is near oversold, but in a downtrend, that's not a buy signal by itself. Oversold conditions can persist for a while, and catching a falling knife is always risky. The bottom line, Polygon's long-term vision is solid, but the short term is precarious. The project's roadmap is ambitious, and its developer community remains active. But the market is focused on immediate price action. The $0.50 support is the battleground. Hold, and we could see a recovery. Break, and it's a world of pain. This is the level everyone is watching, and it will likely determine the next major move for Matic. Set your alerts, watch the chart, and don't get caught off guard. Staying proactive and prepared is the best way to navigate these uncertain times. This is a high-stakes moment for Matic holders. Whether you're a trader or a long-term investor, the decisions you make now could have a big impact on your portfolio. Remember, this isn't financial advice. Do your own research and manage your risk. In crypto, volatility is the norm, and protecting your capital should always come first. Next up is Solana, SOL, the high-speed blockchain that's become famous for its lightning-fast transactions, low fees, and ambitious vision. Over the past year, Solana has experienced wild price swings, dramatic headlines, and most recently, a massive comeback that's caught the attention of traders and investors worldwide. Its journey has been anything but boring, and now all eyes are on whether this momentum can continue, or if the chain will face another major test. Right now, SOL is testing a critical support zone between $120 and $130, a level that was once a stubborn resistance but flipped to support earlier this year. This area has become a battleground for bulls and bears, and how price reacts here could set the tone for the weeks ahead. If the bulls manage to defend this zone, it could confirm the uptrend and set the stage for another powerful rally. A strong bounce here would signal that buyers are still in control, and could attract even more capital into the ecosystem. Solana's ecosystem is thriving, with DeFi, NFTs, and memecoins driving real user activity. Projects like Jupiter and Jito are pushing the boundaries of what's possible on-chain, and the network continues to see impressive growth in both developer activity and user engagement. This fundamental strength is a key reason why many believe Solana can weather volatility better than most. However, if price breaks below $120, it would be a major warning sign. Such a move could trigger a wave of stop losses and panic selling, potentially sending SOL down to the $95–$100 range in a matter of days. That would be a psychological blow for the community and could erase much of this year's hard-earned gains. It would also shake confidence in the current rally, making it harder for buyers to step in aggressively. Network stability is always under scrutiny for Solana. Any hiccups, outages, or slowdowns could add to selling pressure as traders remember past incidents where technical issues led to sharp price drops. Reliability is now just as important as speed. At the moment, price is consolidating above support, with declining volume, a classic setup for a big move. This kind of low-volume chop often precedes explosive volatility, so traders are watching closely for any signs of a breakout or breakdown. On-chain data shows whales are accumulating, but at the same time, more SOL is hitting exchanges. This signals indecision. Some big players are betting on a rebound, while others may be preparing to sell if support fails. Technical levels matter more than ever. A bounce here could reward risk-takers with outsized gains, but a breakdown means the bears are back in control, and the path lower could be swift and painful. Holding $120 would show real demand and validate the rally, giving bulls renewed confidence, but losing it could trigger a deeper correction, forcing many to rethink their strategies. The outcome will reveal whether long-term conviction can overcome short-term fear. In moments like these, emotions run high, and only those with a clear plan tend to come out ahead. As with Matic, it's crucial to have a plan for both scenarios. Don't guess or get caught up in the hype. Set your alerts, know your risk tolerance, and stick to your strategy. Watch the charts, monitor volume, and be ready to act quickly. The next move could come suddenly, and hesitation might mean missing out or getting caught on the wrong side. Solana's next move at this support will shape its trajectory for the rest of the year. Whether it's a breakout or a breakdown, the implications will ripple across the entire crypto market. It's a make-or-break moment for one of crypto's most important projects. The coming days will reveal if Solana can truly hold the line and prove its staying power in a fiercely competitive landscape. Finally, let's talk Cardano, ADA, a project that's earned a reputation for its methodical, peer-reviewed approach and a community that's as passionate as it is patient. Unlike some of its flashier competitors, Cardano has always taken the long road, prioritizing research, academic rigor, and careful development over hype and quick wins. This slow and steady philosophy has won it both admirers and critics, but there's no denying the loyalty of its supporters. Right now, ADA is testing a crucial support zone at $0.38 $0.40. This is the same level that sparked last year's rally, making it a psychological battleground for both bulls and bears. Traders are watching this area closely, knowing that history could repeat itself, or break in a dramatic way. A strong hold here could mark the bottom and offer a prime accumulation opportunity, especially with the highly anticipated Chang hard fork and Cardano's roadmap to full decentralization on the horizon. These upgrades aren't just technical milestones, they represent a new era for the network, potentially unlocking new use cases and attracting fresh capital. Cardano's DeFi and governance ecosystem is steadily growing, with more projects and protocols launching every month. However, the price action tells a different story. ADA has been stuck in a persistent downtrend, with sellers firmly in control. Despite the ecosystem's progress, the market remains skeptical, and momentum is lacking. If $0.38 fails to hold, the next real support is way down at $0.24, $0.25, a potential 35% drop from current levels. This isn't just a minor dip, it's a technical cliff that could shake out weak hands and force a painful reset for the community. Such a move would likely trigger widespread capitulation, testing the resolve and conviction of even the most dedicated ADA holders. It's in these moments of fear and uncertainty that true believers are separated from speculators. Macro fears, like global economic uncertainty, regulatory crackdowns, or even delays with the Chang upgrade, could all act as negative catalysts, adding fuel to the fire and making recovery even harder. On the flip side, if the Chang upgrade rolls out smoothly and the market regains confidence, we could see a sharp bounce from these levels. Positive news, renewed optimism, and technical confirmation could all combine to spark a powerful rally, but volume is absolutely critical here. A low-volume bounce won't convince anyone that the trend has truly reversed. What bulls need to see is a surge in buying, with strong participation from both retail and institutional players. Only then can we talk about a real reversal. The RSI is already in oversold territory, which can sometimes signal a bottom, but in a strong downtrend, oversold can stay oversold for a long time. It's a warning, not a guarantee. The stakes are clear: hold 0.38 and keep hope alive, or break down and risk a sharp decline that could define Cardano's price action for months to come. This is a pivotal moment for the project and its investors. For ADA holders, this is a time for vigilance, not complacency. Setting alerts, monitoring news, and staying engaged with the community are more important than ever. Know your risk, have a plan, and watch the technicals closely. Don't let emotions dictate your decisions. Stick to your strategy and be ready to act if the situation changes. The outcome at this level will define Cardano's trend for months to come, shaping sentiment and influencing the next wave of development and investment. Support and resistance matter. Right now, ADA is at its most important test yet. The next few weeks could determine whether Cardano remains a top contender or faces a long road to recovery. Polygon, Solana, and Cardano are all at critical crossroads. These support zones are the last line of defense for the bulls, and what happens here will shape the market's next move. A strong hold could mean recovery. A breakdown could signal deeper pain ahead. This is a high-risk environment. Do your own research, manage your risk, and never invest more than you can afford to lose. Which of these altcoins do you think will hold support? Let me know in the comments. If you found this helpful, hit like and subscribe for more crypto analysis. Thanks for watching.